Hello everyone and welcome to another episode of The Current. Sorry for the long delay. Batteries have kind of popped off if you haven't noticed, and Aubert and I have been drowning in work. To make it up to you though, we'll be releasing two new videos, one for Q4 2022 and one for Q1 2023. And just kind of to get right into it, let's start with the big stuff.
Great. So we're going to be covering a couple of topics. The first of which is big stuff, which usually means big money investments or funding. Next, we're going to cover some announcements for collaborations, partnerships, and supply agreements. After that, we're going to go over a couple of different EV newses and some not great ones, but just the general industry as it goes. And we're going to finish with a new novel chemistry that's popped up on the radar in a big way in the last year. So let's get to it.
All right.
So first up, Form Energy raised $450 million in a new Series E financing round in October. So the company's first project is they're going to be building a pilot installation in Minnesota using the Great River Energy utility system to help get their costs down. And they're expecting the facility to deploy in about 2023. So that's very exciting for Form Energy. We've covered them before in other videos, and I'm just really excited to see an actual technology that's fit for grid storage actually being commercialized. Next up, probably the biggest news of the quarter was that the US DOE revealed the first 20 companies that will benefit from the US bipartisan infrastructure bill. And in total, these companies are going to be funded at about a $2.8 billion level. There's a whole bunch of companies in this, a couple of our favorites that we've covered before in the Who's Doing It Right series, including Group 14, Amprius, and also Scylla. And right now, Jeff has up a picture that you can see of basically the map of all the different companies and where they are in the US that have been funded. So a whole bunch of players here. Some names you'll recognize, some you won't. We'll put a link in the description for the videos. You can go look up the specifics. But basically, they're going to cover a wide range of different materials and processes to help support an actual US-made, US-built, US-sourced battery ecosystem.
Yep, and if you look at each of these companies, they're going to be producing either NMC, LFP, graphite, or separator. And the interesting thing here is lithium. You have Piedmont Lithium and Albemarle. Although a little bit counterintuitive, the hydroxide and the carbonate are directly used to make NMC and LFP. So kind of makes sense to shoring up and making the entire US sourced battery system.
And of course, also the silicon to use as an additive for anodes or wholly itself for the anode for both Group 14 and Scylla. So the next news is actually also for Group 14 because they closed another round for $214 million for their Series C funding round. And so they had a really big quarter. They got the money from the DOE grant, and they also got a pretty big funding round. So they're basically going full steam ahead at commercialization right now and just building out their next tier of factories. And then the very last piece in this section is Our Next Energy announced a $1.6 billion investment in a new battery cell manufacturing plant in Michigan. And that's also kind of exciting to actually see them kind of commercialize or at least start to build a factory, or at least announce to start to build a factory to commercialize their kind of novel pack architecture.
Yeah, Aubert and I talked about this a little bit. It's kind of a play at supply chain, right? Supply chain of batteries is getting exceedingly hard, and since they make packs which integrate batteries, if they aren't able to get the batteries, they're better off learning how to start making their own. But kind of like the Tesla and Panasonic story, we kind of expect a 10-year lead time till they can get up to the quality or the level of what you're used to seeing in CATL or Tier 1 supplier batteries.
And a lot of pain in the process. And I think they're probably hoping for another round of U.S. investment coming up to help them fund that. We'll see that in the coming months, maybe.
Yeah, and I mean, to kind of continue the theme here on supply chain, GM's making a ton of moves. So GM's entered collaborative agreements with Queensland Pacific Metals. They've also, for nickel, they've also gone ahead and got some battery grade nickel from Canada. Additionally, they're also going and grabbing from 1D some silicon. So it looks like GM is moving around a little bit as well to get the materials that make up the battery. Now, we don't know whether this is because Our Next Energy, they're looking to become a system integrator themselves to cut the supply chain, shorten it, or if they're going to use those quantities to leverage with partners they're already buying batteries from. Similarly, Ascent Elements is moving in and going to start supplying raw materials to the U.S. for their battery production. This is kind of the natural evolution, guys. At some point, we have to start using recycled battery materials. You know, we can't keep making batteries and then just throwing them away. We have to recycle and make use of them. The real challenge here, like any kind of recycling effort with lithium-ion batteries, is what is the purity, what is the grade, and what kind of battery does that make? Maybe we get into a world of binning batteries.
And what is the cost?
Exactly. And then finally, CATL is working with Honda on a collaboration. This kind of makes sense. Everybody's just trying to get supply. That's the big game right now, is get supply so that any kind of EV effort you put forward, you're going to have a supply to actually feedstock it.
And that takes us to our next section, which is basically news in EVs. And although that last one sort of half counts, the next one fully does. So Foxconn just acquired about $170 million more in Lordstown Motors. Now, there's kind of a trend right now, and we'll go over a couple more articles after this in kind of the EV world on kind of funding and next step markets. But the real reason that they did this is because basically Lordstown is just bleeding money manufacturing right now. And the article actually covers that they freely admit that the cost of materials they're using right now to build their endurance electric pickup truck is actually higher than the price they intend to sell it at. So that means they're losing money on every single product they manufacture and ship. And what they basically said is that they're not going to see positive gross margins until their bill of materials is reduced. And really that comes at scale and with higher yield and with larger, longer term supply contracts. And so they have to basically be able to finance themselves as they bleed money until they can hit that. And that's going to be kind of interesting to see how they're able to do that. And then the next article, sort of similar bend to that, is so Rivian's pausing its joint venture plans with Mercedes-Benz, which it made a couple months before this, in I think it was August or September. And basically they were initially going to make electric vans with them in Europe. And basically what they said is that they're pausing this partnership because they can't afford to do it. And they basically need to use whatever existing capital they have to make themselves cash positive in their U.S. operations first before they start investing in other things. And there's a direct quote from their financial officer, Claire, talking about that.
Yeah, go back and watch one of our videos on the, walking through the Valley of Death. They're basically in the second valley right now before they actually make money. Go watch one of those and you'll get a good idea of where they are, which is they made something, they make a product, now they're trying to expand and build, and they're back negative until they figure out how to get positive again.
And now this is a little bit of a PR piece, but which we normally try to avoid because Jeff and I are a little skeptical of those and don't really care. But so Tesla's semi truck just completed their first 500-mile trip with a full load, Class 8 truck with about 81,000 pounds of a load. And so they've been talking about this for a long time. It took them a long time to get here. I'm really interested to see what happens if sort of the AI-controlled EV trucks ever become a thing for shipping. Obviously, there's lots of problems that have to be overcome first, and the trucking industry really, I think, is still looking at the fact that there's just not enough electric refueling stations for any of this to be practical yet. But it's sort of the next step in that direction, and I'm really interested to see how that goes. So we'll be tracking stuff like this a lot in the next year. I think it's really going to be a big trend. And then the last piece of the EV news is that Panasonic Energy and Lucid announced a lithium-ion battery supply agreement for their Lucid Air luxury EVs. So again, just everyone securing their lines of supply to make sure that they actually get the batteries they need, hopefully at the cost they need to actually build their EVs.
Speaking of more cost-efficient things, actually, we're going to move on to chemistry, and this might be towards that, although I think, frankly, Aubert, you and I can agree it's never making its way beyond a hybrid. Both BYD and CATL have announced that near term, they're saying 2023, 2024, they're going to start producing sodium-ion batteries. Just a quick refresher for everybody. Basically, cheap, but low power and energy. Good cycle life still, so it'll go a while, but you aren't going to get the same performance metrics as you get as a lithium-ion battery. Overall, we're of the stance that we think this is healthy for the market. This kind of goes to there isn't a silver bullet kind of approach, so you're going to start seeing people diversify with different chemistries to meet their needs. You could see this in motorcycles or e-bikes or something like that and take a load off the lithium-ion battery market from that perspective.
And especially with basically the cost increases and sort of, let's call them the staple lithium-ion chemistries, the LFP and the NMCs and the LCOs and the NCAs. Basically, you have to go somewhere else if you're a cost driven market. You just can't afford them when everyone else is driving up the cost, and that there's no supply to begin with for a lot of the secondary markets right now.
So that kind of covers it for Q4 2022. I'd like to thank everybody for joining another episode of The Current, hosted by Battery Talk. If you guys want to learn any more thing about batteries or what's going on, please visit our channel. We're more than happy to post new content, but also encourage you to watch our old content. Thank you so much. Like, comment, subscribe.